Hello and welcome to another session of the My Solo 401k Financial My Community weekly YouTube series. We're here to go over a great topic today, which is the comparing the Solo 401k plan provided by My Solo 401k, which is a full featured plan versus the basic or quote free Solo 401k offered by Charles Schwab. So if you're on YouTube, please like and subscribe. You can also post comments, of course, or questions. We're going to have a chance to go through all those after we go through these initial slides. So yes, we're comparing the basic free solo 401k from Charles Schwab versus the full featured solo 401k from my solo 401k Financial. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we host webinars at least once a week on YouTube, sometimes a couple times a week. So just subscribe for access to the webinars. We've gone, for example, over the magic number of income that you would need to be able to maximize contributions. We've been talking about the recent exit of Vanguard from the individual 401k business. Of course, today we're talking about comparing us versus other solo 401k providers, starting with Schwab. We'll also talk about Fidelity shortly. We're preparing a deep dive webinar. We're putting the final touches on that regarding solo 401k payroll integrations. We're going to start with Gusto. So please subscribe so you get all the notifications, you get access to the recordings, and you can stay engaged. So to give us an overview of where we're headed today, we want to start off, of course, with the basics, right? What are the eligibility requirements to open a solo 401k? Why would someone want to open a solo 401k, right? What are some of the benefits and features? Then we want to dive into the direct comparison of the Schwab Solo 401k versus the Solo 401k provided by us, my Solo 401k Financial. And then we'll build off of that to see, okay, well, what are some of the top use cases, understanding those differences. We'll highlight some resources, and we'll go through some bonus content of the $1,500 Solo 401k tax credit. So we do host webinars every day, unless we're here on YouTube, on our community, which is mysolo401k.net/my community. So it's like an office hours Q&A type session. It's always free to join, of course. All are welcome, right? It's super educational. You can find out what other people are asking about. So you can come and ask your own questions. So it's a great way to learn. So starting out with those basics. So in order to be eligible to set up a solo 401k, you have to be self-employed. So think like an independent contractor, maybe a solo practicing attorney or other professional like a CPA or realtor, and then have no full-time W-2 employees working for any business owned by you or a spouse, if any. Now, a spouse could participate in the plan as long as the spouse is also working in the business, and it would still be considered a solo 401k. It would be one plan, one fee. It would still be, quote, a one participant plan. So having a spouse is not going to preclude someone from being able to set up a solo 401k. But if there are other non-spouse, non-owner, full-time W-2 employees, then the person wouldn't be eligible to set up a solo 401k. Now, as far as some of the other top eligibility considerations, no, you don't need to have a formal legal entity, right? You could just have an unincorporated business, right? A sole proprietorship. The key is that you're reporting earned self-employment income on your taxes. So that's going to be on Schedule C if your business is taxed as a sole prop or maybe a disregarded entity like a single member LLC, or W-2 wages if your business is taxed as an S Corp. Again, your spouse or business partner can participate as long as they're also working in the business, reporting their own earned self-employment income, like a separate Schedule C for your spouse or a separate W-2. You can have a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan. Again, as long as you've got that separate earned self-employment income. So why open a solo 401k? In other words, what are some of the benefits and features? Well, at a high level, a solo 401k is going to give you a self-directed solo 401k like we offer is going to put you in control over your money. I mean, specifically, you would have checkbook control over your money. You're also going to be able to invest by wire, right? If you open up a bank account, which will help you do, you could have debit card access, and you're going to have access to a wide range of investments. You can make high contributions. A solo 401k plan has the highest contribution limits for any defined contribution plan available to self-employed individuals. You can take a 401k loan, et cetera, et cetera. So those are some of the top reasons at a high level. So you got, just to dig in a little bit deeper, to put a little more meat on the bones, alternative investments. By that we mean true alternative investments, real estate, notes, precious metals, private placements, tax liens, cryptocurrency. And so for a lot of those alternative investors, they want checkbook control over their money. So we're helping them open up accounts at the bank or brokerage of choice. We help clients open up accounts at hundreds of different banks, many different brokerages. Contributions. As mentioned, the solo 401k plan has the highest contribution limits for any defined contribution plan available to self-employed individuals. And then on top of that, our plan also allows for Roth. It allows for after-tax contributions, which is how one makes mega backdoor Roth contributions for those that are trying to maximize the money going into their Roth account. Of course, it also allows for pre-tax contributions if the individual's objective is to reduce their taxable income in the year for which they make the contribution. You can take a 401k participant loan. So this could be like an emergency fund, or it could be if you want to invest in your own business, or if you want to remodel your house. So under the rules, that's not going to be considered a taxable distribution as long as it's documented as a loan, which we handle the documentation requirements, and paid back according to the payment schedule. So the payment terms would be, you could borrow up to 50% of the balance, not to exceed $50,000, and then use those funds for any purpose whatsoever. It's going to have to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest would be prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. You can consolidate, another top benefit, right? You can transfer money from a traditional IRA or a SEP IRA or a former employer plan. It could be pre-tax or Roth money if it's coming from a former employer plan, like a former employer 401k. Now, if it's Roth money in an IRA, under those Roth IRA rules, you can't transfer money from a Roth IRA to any type of 401k, including a solo 401k. So you could just be trying to consolidate for purposes of being able to just organize your accounts. Or sometimes folks are moving over all the pre-tax funds from their IRA accounts to set the stage for them to be able to make backdoor Roth IRA contributions, because you can not only make mega backdoor Roth solo 401k contributions to the solo 401k, and that's not going to stop someone from also making backdoor Roth IRA contributions. No UDFI. So as mentioned, one of the top reasons that clients set up accounts is the ability to invest in alternative investments like real estate. Some individuals are also investing on a leverage basis. In other words, there are companies out there that will lend money to individuals' retirement accounts to invest in real estate. So that has to be a special kind of lending called a non-recourse loan. And if that individual were to make that debt financed real estate investment through an IRA, the income that derives from that investment would be subject to a special tax payable by the IRA called unrelated debt finance income tax. But there is an exception to that unrelated debt finance income tax when one has debt income from debt finance real estate inside their solo 401k. So for that specific use case, the solo 401k is going to have a big advantage over making the same investment via self-directed IRA. Bank or brokerage account. So we're totally neutral on where the account is at. Could be at Fidelity or Schwab, or an institutional account if someone is working with an advisor. Could be a bank account, right, if someone wants to invest in alternative investments. But at the same time, we're super hands-on in helping clients open up accounts, right? We prepare the paperwork to open up the accounts at the bank or the brokerage, etc. Conversions. So our plan is going to allow for different types of conversions. Someone could be moving money from their pre-tax solo 401k account to their Roth solo 401k account, right? Let's say they're being coached up or advised by their CPA, financial planner, to say, look, your income is low this year. Why don't we move some money from your pre-tax account to your Roth account? It'll be taxable now, but all the gains could be tax-free going forward. So our plan would support those types of in-plan conversions, and we handle the required tax reporting that goes along with it, right? The 1099-R that would have to be issued, but also moving money from the after-tax solo 401k to the Roth solo 401k, which is how one makes mega backdoor Roth contributions. That's a two-step process. You first need to make an after-tax contribution to an after-tax account before it then gets moved over to the Roth account. $1,500 tax credit. And we'll talk a little bit more about that in a moment, but just at a high level, our plan, all types of plans, right? Whether it's a new plan or if someone's restating an existing plan from, say, maybe a discount brokerage like Vanguard to our plan, is going to make the self-employed individual eligible to be able to claim $1,500 in tax credits. It's $500 per year over 3 consecutive years, which is going to more than offset the cost to set up our plan over the first 7 years. And then to go along with all of those features is all of the support, right? Whether it's the compliance support or the educational support or just, the mechanics of filling out paperwork, et cetera. We are providing that support every single day for our customers. So that gives us a good understanding of the basics and some of the reasons that folks would set up accounts with us. But that still could lead the question, okay, well, exactly what is the difference between setting up a solo 401k with my solo 401k versus setting up a solo 401k with Schwab, right? The basic plan that they offer directly on their platform, the quote unquote free Schwab individual 401k, which is the language they use on their website. So let's start to go through some of the features and considerations. Well, let's start at the beginning, right? Account opening. So if someone wants to open up a basic free plan at Schwab, they're going to have to go on Schwab's website, download all the paperwork, right? Because as you might imagine, a 401k plan, setting up a 401k is a paper intensive process, right? Technically, it's a trust. So like any legal entity, which is what a trust is, it's the paperwork that creates it. So if you want to open up a solo 401k at Schwab directly, you would need to go to their website, download their application, their adoption agreement. You've got to fill it all out, right? It's many, many pages. And then submit it to Schwab to get it opened. Where, of course, with us, we have a quick 1-minute application to gather the information, and then we prepare the adoption agreement specifically for your business. And then step 2 or second consideration here, the account setup. Of course, if you have your account through Schwab, if you open a solo 401k directly with Schwab, the account's going to be at Schwab. But you can also set up the plan with us, and then we'll prepare the paperwork to open up free brokerage accounts at Schwab, specifically for our plan. So even though the account's at Schwab, the plan is with us. So what you can do with it, right? The fact that it's eligible for the tax credit, the Roth, the alternative investments, all those features we just started to go through would still apply because the plan is provided by us, even though the accounts are at Schwab. And those are free accounts that we would help our clients set up, meaning Schwab doesn't charge anything to open the account. There's no maintenance fee. There's free online trading. They even come with a free checkbook, etc. So third consideration is the cost. So of course, as mentioned, it's a quote unquote free plan at Schwab. So there's no cost to set it up. Our plan does come with a fee, right? It's $650, which includes the $525 establishment fee plus the first $125 annual fee. On the anniversary date, we charge our $125 annual fee starting 12 months later. So if you sign up now, it'd be 12 months, be due 12 months from now, cover the second year. Totally flat fee, right? That's for all the ongoing compliance support, regardless of what's going on with your plan. But that cost is going to be offset by the fact that, again, setting up our plan is going to make the self-employed individual eligible for $1,500 in tax credits. So it's $500 per year over the first 3 years, which is going to more than cover all those fees to set up the plan with us for the first 7 years. So continuing to dig into the features. So Schwab did update their plan so that now the individual can make employee Roth contributions. Likewise, of course, our plan has always supported employee Roth contributions. Next consideration, Roth employer contributions, though, which became authorized under Secure Act 2.0, that is not supported by Schwab's individual 401k. Whereas, of course, our plan does allow for employer Roth contributions. Mega backdoor Roth contributions. This is when one makes voluntary after-tax contributions and then moves the money over to either a Roth 401k or Roth IRA. Schwab's individual plan doesn't support it. Ours does, right? And we handle all the ongoing compliance support that goes along with it, right? All this mechanics of opening up the requisite number of accounts, educating customers on how much they can contribute, and then following through with the 1099-R that's going to be required when one moves the money from the after-tax account to either the Roth Solo 401k or Roth IRA. In-plan Roth rollover. So this is where one moves money from their pre-tax Solo 401k account to their Roth Solo 401k account. Like we were talking about up above with the scenario where the CPA or the financial advisor or planner might be recommending that the individual moves money from their pre-tax Solo 401k account to their Roth Solo 401k account because maybe their income is relatively low that year. So they want to start to have more funds in the Roth account so they can grow subsequently, potentially tax-free. So our plan allows for that in-plan pre-tax to Roth conversion. Schwab's doesn't. We also handle the required 1099-R that would be needed because that would not only be taxable, it would also be reportable. Solo 401k participant loans, right? That's one of the top reasons clients set up accounts with us. And we handle the loan documentation requirement, etc. Schwab's plan doesn't allow for Solo 401k participant loans. All the compliance support regarding the rules, right? We're on the phone every day, fielding emails, etc. regarding how much can I contribute, right? Educating customers on the rules. What's the process to invest in real estate? How do I take a Solo 401k loan? Preparing those loan documents, right? And then also the 1099-R, the 5500EZ, etc. Alternative investments. Our plan allows for true alternative investments, right? Real estate, private stocks, syndicated transactions, precious metals, crypto, et cetera, whereas Schwab's plan doesn't. And you're going to be limited to the brokerage type investments that you can invest in at Schwab, right? Like a mutual fund, et cetera. Form 5500EZ reporting. So we handle that as part of our service for no additional charge. It's an optional free service. We prepare the 5500EZ in the eFast system so it can be filed electronically as opposed to the paper form. Whereas Schwab, it's clear based on their application, they don't handle that. You'd have to work with your tax advisor to do the 5500EZ reporting. Now, Schwab, based on experience, they will issue a 1099-R if it's needed. Of course, we do that as well as part of our service for no additional charge, right? That's going to be your pre-tax to Roth conversion. That would be a 1099-R scenario. As mentioned, Schwab doesn't even allow for the pre-tax to Roth conversion. After tax to Roth conversion, Schwab doesn't allow it. We, of course, do because that's essential for the mega backdoor Roth. And then we handle the 1099-R that's needed as well. Clients just have to let us know about the information that with a 24/7 online form they use that puts the information in the queue for us to be able to prepare that 1099-R. Super important compliance that is covered as part of our fee. So opening an account at other places, right? Schwab is going to limit you to, of course, accounts at Schwab, right? That's why it's free. They want you to have the money at Schwab, where we're neutral on where our customers have their accounts at. Again, we help them open up accounts at hundreds of different banks, many different brokerages, cryptocurrency exchanges, alternative investment platforms, etc. And then, of course, the $1,500 Solo 401k tax credit. Schwab's plan doesn't include the required notices, the forms, the language in the adoption agreement, all the things, those specific provisions that are needed to make the self-employed person eligible to claim the credit, where of course ours does. We were the first self-directed provider to offer a plan that makes the self-employed individual eligible to claim the credit. Right? We've been working with stakeholders, the IRS, for almost a year just to get that implemented properly. The form got updated. The form that's needed to be able to claim the credit was updated at the end of December by the IRS, and then that's when we rolled it out to our new customers going forward. So that's super helpful in offsetting the costs and making that cost efficient. So building off of that, right, what are some use cases, right? Well, the frugal investor, because again, our plan is going to make the individual eligible for a $1,500 in tax credits, which is going to more than offset the costs to set up and maintain the plan with us for 7 years. The Roth Maximizer, our plan not only allows for employee Roth contributions, but also employer after tax, which is how one makes mega backdoor Roth. So ultimately, the individual will be able to contribute for 2024, if they've got the self-employment income to justify it, $69,000 or $76,500 if they're 50 or older. And then on top of that, they could also move money from their pre-tax solo 401k account to the Roth solo 401k account to really maximize their Roth solo 401k account. The large account holder. So if the individual has more than $250,000 in value of their plan, an informational tax return has to be filed. The name of that informational tax return is a Form 5500EZ. We handle that preparation and filing as an optional free service. In other words, we don't charge any fees for that, to be filed electronically under the eFast system to make it easy for all parties. The alternative investor. So if someone wants to diversify into true alternative investments like real estate, crypto, precious metals, etc., that would be another great use case to set up the plan with us, because our plan allows for those types of investments. So Solo 401k now qualifies for a $1,500 tax credit. So Secure Act authorized a number of different tax credits to encourage businesses to set up 401k plans. So there's the startup cost credit, which would not be available to someone that sets up a solo 401k, because you would need to have non-owner employees, which of course, in order to be eligible to set up a solo 401k, you can't have non-owner employees. But there's another credit, different section of the code, doesn't require that there are non-owner employees. Therefore, a self-employed individual who sets up a plan that includes the automatic participation feature, like ours does, all the required notices, like ours does, would be eligible for a $1,500 tax credit. There's no income exclusions, etc. $500 per year for 3 consecutive years. This is going to be all new plans going forward, plus individuals that are upgrading existing plans, like the discount brokerages, such as Vanguard and Fidelity. Or if they upgrade their plan to our plan, now going forward, the self-employed individual would be eligible to claim the $1,500 in tax credits. And it's not based on actual costs. So even though the cost to set up and maintain the plan is less than $1,500, that's not going to prevent the individual from being able to claim the full $1,500 in tax credits. So if the individual sets up a new plan here in 2024, when they file their 2024 taxes, they'll be able to claim $500, the $500 tax credit, and then again for 2 more years. Or if they upgrade their existing plan from, say, the basic plan at Fidelity or Vanguard or Schwab here in 2024, they will be able to claim a $500 tax credit when they file their 2024 taxes. And then again for 2 more years, as long as they maintain the plan with the automatic participation feature. So our fees are $650, which includes the $525 establishment fee plus the first $125 annual fee. And then on the anniversary date, so this time next year, for example, if someone signs up now, the $125 annual fee would cover the second year. So in the first year, the net cost is going to be $150. In the second year and the third year, the value of the credit exceeds the cost. This is a tax credit, not a tax deduction. So with a tax deduction, you're reducing your income and then you determine your tax liability. Whereas with a tax credit, you first determine your tax liability and then you can reduce your tax liability dollar for dollar by the value of the credit. So therefore, a tax credit is much better than a tax deduction, because of that dollar for dollar reduction in your tax liability. In order to be eligible, you just have to be eligible to set up a plan, and then set up a plan like our plan that includes the automatic contribution feature. What is the automatic contribution feature? Well, it sets a default 3% contribution percentage, but the individual, meaning the solo 401k owner, you have to be given the option to opt out of that default amount. So opting out of the default amount doesn't mean you can't contribute. You can contribute more, you can contribute less. You can contribute in whichever interval or schedule you prefer. In other words, you're not even required to make annual solo 401k contributions to qualify for the credit. Again, if you have an existing plan, you can upgrade it to our plan to be eligible to claim the credit. You claim the credit by filing Form 8881. So what we've done is we put together a number of walkthroughs, right, based on the different scenarios, right, depending on whether the individual's business is taxed as an S corp, maybe versus a sole proprietorship, with all the specific steps that need to be followed in order for the individual to be able to claim the credit. We literally walk through the forms. And we make that walkthrough available to all of our clients whose plan includes the automatic contribution feature to make it easy for them to be able to claim the credit. So just a couple quick examples. If Lindsay is self-employed, she has a solo 401k plan. If she upgrades her plan to our plan here in 2024, she would be able to claim the $500 tax credit when she files her 2024 taxes. And then again for 2 more years, as long as she maintains the plan with the automatic contribution feature. Whereas Brad, he's eligible to set up a plan. He's a solo attorney with no employees. So if he signs up for a solo 401k by the end of the year, he would be eligible to claim the $500 tax credit when he files his 2024 taxes next year. And then again for 2 more years, as long as he maintains that plan with the automatic contribution feature. So again, resources would be the community. We have daily Zooms, we have forums, we have webinars and videos in a library. We've got hundreds of videos and webinars in that library. It's all free to join. All are welcome. So thank you so much for participating and joining. If there's any questions, please don't hesitate to chat it over. We'll give it a moment. All right, everyone. Well, thank you so much. All the best. Please continue to engage. Like I mentioned, please subscribe, as we've got a lot of great content coming up. Subscribe to YouTube. You get all the notifications, get the recordings, et cetera, et cetera. So until next time, everyone, take care.